Sunday night futures live. Welcome. And what we're going to talk about tonight, we're going to talk about a new, how do I put it? A new initiative, a new challenge. It's a new challenge. Our 30-minute stock chart club. There's a link below if you want to join private live streams. And I don't even know if I'm going to keep calling it the 30-minute chart club, but what I found in those sessions and the email traffic back and forth is that one of the most common questions asked of me is, how do I trade like you do with a small account, meaning option strategies? So I'll talk about it more in a moment. And it's going to be it's already begun, actually. It's going to be a very, very big initiative on my part, and that is educating people on how to trade options, because options allow you consistency of profitability if you manage your business right. And I really, I was big into option selling back in the late 90s, early 2000s, moved away from it, got into a more equity swing trading style, but I always did some options trading. But back in 2021, I really changed course because I was worried about the inevitable being a big correction in the market, and I just wanted to be neutral. I just wanted to be neutral and generate cash flow, and it's worked out spectacularly. So I'm going to talk about it more in a moment. We're going to talk about China. We're going to talk about NVIDIA's earnings and the drivers of the market this coming week. We're going to do stock chart requests. And what else? Hope everybody had a good weekend. I was out on a boat on Friday evening, then in the Hamptons on Saturday. Back now. Good day. We sent out the weekend commentary to members. Our strategy is on there in terms of where we plan on leaning into the short side yet again. And let's begin. Let's start off with comments. Let the future settle down here for a moment. Let's say hello to people. Wow. Sean, welcome. Kelly, welcome. Good to have you. TF Hatter, hey Bob. Hey y'all, facing blue. Face blue smiling. Okay. RB, hey Bob, happy Sunday from rainy Southern. Really raining out there. Good for you. Danny, welcome. Corey, good afternoon, Bob. I keep hearing a lot about TMF. Can you shed light on this? TMF, is that a stock symbol? Let me know, please, and I'll write it down if it is. Hey, Bob, I'm looking forward to. Thank you, Jeffrey. Glad to have you here. Awesome. Glad that you're here. Hello, Robert L. Peters Biden. Okay, Dan. Talon, welcome, brother. All right, let's get to it. Let's start talking about the futures market. Let's wet the whistle a little bit. And we will get started. All right, I want to begin here with a 4-minute chart and a 4-hour chart, 4-minute chart, 4-hour chart. We remain in a downtrend channel. They closed out the session challenging the upper band of the downtrend channel. And as you can see here, it appears as though we are up. Yes, we are fractionally. Looks like we're probably going to test that upper band yet again. Do we break out? I think there's a good chance that we do break out. I think that what they're going to do is they're going to take NVIDIA and they're going to use that as a rallying cry to get AI stocks going, semis going. Although the semiconductor holders last week broke down. So be careful. A lot of potential damage can be done in the coming weeks. But right now, I think we're setting up for a counter trend rally. TZ Burton, welcome. Mr. Pete, welcome. Corey, TMF is leveraged ETF 20-year bond ETF. We'll write that down. I'm always going to say this, use a lot of caution with these leverage products, especially the 3 times, because they can break. They're derivatives. They're derivatives on derivatives. So they do break. They did that to Nugget, NUGT, back in 2020 during the COVID correction. Now it's a 2 times leveraged ETF. Okay, and AMD for RB. Okay. Seymour Rivers, welcome. Good to have you here. Okay, let's get to it. All right, so we went over the 4-hour chart, testing the upper band of resistance. We remain in the downtrend. Let's go to a 5-minute chart. A tame open. The moving averages are stacked accordingly, meaning that we're probably going to get a bias to the upside here. So E-minis looking good. The NASDAQ futures, let's pull back to the 4-hour chart for a moment to see where we're at. Let's get rid of this. And let's get our crayon out. Okay, so we remain in a downtrend channel. It appears as though we're going to rally up to this upper band of resistance. 5-minute chart. Moving averages are stacked appropriately, bullish. So I think that we probably move higher here into the morning. We're now up just shy of a 1/4 percentage point. So the NASDAQ futures outperforming the E-minis, and no great shock. Again, I think what they're going to do, they're going to do the narrative play. Marvell Technologies, I believe, comes out this week. Not as big of a headliner as NVIDIA. They are going to try to get a lot of play off of NVIDIA. We're going to talk about that chart in a moment and how expensive that stock is right now and how it must beat on earnings. So NASDAQ looking good here at the open. We are now up a 1/4 percentage point. Taking a look at the Russell 2000, which had a really fabulous outside reversal bar, bullish key reversal bar on Friday. If you're not familiar with that terminology, is link below, 5-part video tutorial. My top 5 favorite candlestick patterns, free. So the moving averages are okay. They're not great. They're not stacked appropriately, but they're improving. So in the opening salvo here, we're up spot 0.08%. If you hear dogs in the background, I apologize. My dogs are in heat right now, and it's been a heck of a weekend. Crazy weekend. All right, so that's the equity market. Let's bring up the Dow futures. Do I have them up here? Dow futures. A really good open here. Nice bullish reversal bar, up fractionally. Moving averages is stacked bullish. I think that we're probably going to move up higher here, at least in the short term. This is only a 5-minute chart. When we're looking at the 4-hour bars, you can see that these moving averages are still a hot mess, right? So very, very short term, we look good for a pop. Longer term, there's quite a bit of healing that needs to be had on an intraday basis, maybe 2 to 3 days of healing before we get a really, really measurable and sustained rally going here. Now, on that rally, we spoke about on the week ahead commentary with members that we're looking to add to short positions. We may book some profits here short term, but we're going to be looking to lean into the short side on a rally up and into resistance levels, both on a daily time frame. And if that daily time frame doesn't hold and we break through it, we have another resistance level on a weekly chart that we're looking to lean into short. So if you're not currently a member, please sign up. 14-day free trial offer, free, and watch it. All right. So those are the equity markets. They're looking good into the opening session here. But now we want to take a look at where the rubber meets the road, and that is yields. What are yields doing? We got a pullback on Friday on the 10-year. We're down a bip at the open here, but the chart is still strong. We broke down on a daily time frame below one key support level on the 10-year yield, but that does not mean that the trend is broken by any stretch of the imagination. So these yields could still come back to haunt us. If you see a rally back on yields and a new weekly higher high, that's a problem for the markets. So especially high beta tech and small caps. And if you take a look at the dollar, wow, we're dropping here. The dollar looked as though we were having a little bit of topping action on Friday. I tried to put out an order. I did a live stream video on Friday afternoon at about 2 p.m. And I was going out in a boat. I didn't have time to do a late afternoon live stream. So I tried to execute a trade on NUGT, opening up a strangle. That's the sale of a deep out of the money put, or in this case, an out of the money put, and simultaneously an out of the money call. So we're trying to generate cash flow. If the shares are assigned to us, okay, we're good there. That order did not get filled. I did that live. Our meta trade did get filled. If you watch that live stream from Friday, that trade got filled later on in the afternoon. I did not adjust that position at all. The market makers came to us. They took our offer, and we now have a new trade going into Monday in Meta. So dollar is now pulling back measurably here at the open. I'm not getting any stats on the percentage move lower, but clearly lower. And when we're taking a look at the US dollar, we also want to take a look at the euro. The euro is looking pretty good. It's down on the session. It says it's down. It doesn't look down. Looks like it's up. Sometimes these are wrong on Sunday nights, so don't read too much into their percentage gains and losses here. This looks up. Dollar looks down. Yen is up relative to the close on Friday. That's clear. So we opened down. Now they're starting to bid this up. The yen did not have a good week last week. It broke support. It did rally off the lows of the week, but it did not have a good week. So it appears as though, and the yen, euro did not have a good week last week either. So early on in the week, we may get a bit of a reprieve on the rally in the dollar. What's that good for? You guessed it. Gold stocks, silver stocks, emerging markets, etc. Let's take a look at commodities now. Let's go with gold because we just got off the dollar, and wow, look at this move up in gold. Gold really, really looking good here. Let's go to a 4-hour view of gold. Gold remains in a clear and defined downtrend channel. So no breakout here quite yet. But we are looking to put on a measurable trade here on the GLD using very, very long dated call options. But I'm not going to put that trade on until I see a break on the US dollar and a breakout on euro yen. Then I'll look to the gold markets and I'll put my trade on. Not until then. So the 4-hour chart, we're still in a downtrend. No reason to go chasing this, even though the dollar's down at current. Gold up. The dollar's still in an uptrend, daily, weekly time frame. Gold is in a downtrend, daily, weekly time frame. Odds favor bulls on the dollar. Daily 5-minute view. Nice little move up here in the opening, up $3.10 the ounce. Let's check out silver. Silver bidding here. Wow, silver's really moving up nicely here. up spot 4, 3%. It had a doji star formation. That's a sign of indecision. One of my top 5 favorite candlestick patterns, link below, free. And we are now getting a move up higher on silver, looking good here at the open. Moving averages are stacked, looking very good. Let's check out the 4-hour time frame here. Do we have a breakout, or are we near a breakout? Let's clear all this junk off. Start anew. We have a breakout on silver. We broke out on the 17th. And now what we're doing here, folks, and this is what's critical, higher lows. We don't have a breakout, or I should say we don't have a continuation breakout yet, but it appears as though that's coming. So we have a breakout of the downtrend channel, higher lows. Now we're looking for higher highs. Looks like silver is ready to go here to the long side going into the new trading week. So members, get ready. We're going to be active in silver this week. 5-minute chart. You can see how we're nearing that upper band of resistance. If we get a breakout, what we want to do is we want to know about it. Okay, looking good. Our alert is set. Moving on to, let's continue on with energy. Oil. Oil pulling back here at the open. And that's good. We have a short on Marathon Petroleum. We closed out our long put spread there. We booked a profit on that short. We are still short using a call spread, deep out of the money call spread. So any pullback in oil will probably result in a pullback in MPC. So right now we're underwater on that trade, I believe. Oh, no, we're profitable on that trade. We're profitable on that trade, and we'll look to close that out probably 21 days to expiration, which could be this coming Friday. So more to come, members, as we close that out. What else we want to look at? We want to take a look at Nat Gas. We're positioned here. Nat Gas up 1.25%. This is a pretty big move at the open on Nat Gas, but Nat Gas has a history of steaming out of the gates on the futures on a Sunday night, and then there's not much there on Monday morning. So take it with a grain of salt. Nat Gas looking good at the open here. Let's take a look at the 4-hour view. Let's clear all this up. And we remain in a downtrend channel. No breakout yet, but it looks like this is going to get resolved to the upside, folks. So beware. Nat Gas looking pretty good as we go into the new trading week. Bitcoin futures took it on the chin at the beginning of the weekend, up somewhat now. I'll be dollar cost averaging as I do each Monday into Bitcoin. So we're going to keep that going. Let's move on to agriculture. Let's go to the weekly chart. I don't follow these day to day. Corn weekly view. This is last week's candlestick, and bullish key reversal bar. No breakout, but I think that we're going to get a rally here on corn. Now, we did take out the prior low, and what that's called is an undercut double bottom, and meaning that usually what you want is, if you're looking to buy a stock, commodity in this case, that's been beaten up, you want to see that it drops down, rallies, and puts in either a higher low, or B, holds the prior low. In this case here, we took out the prior low, but then the buyers came in and bid it back up to close above that price. This is bullish price action. So this could quite very well be a bottom in corn prices. So let's continue on, because there may be a trade to be had using the DBA, which is an agriculture ETF. Soybeans, also a bullish week last week, and it was stopped dead at resistance, but a very powerful week. Wheat, not so good, but we're probing a low. The last low is back in March, the week of March the 29th, and we're probing that low right now. So do we put in a higher low? We'll see. Okay, moving on to, I think the last one we have up is live cattle futures. Why? My New York strip steaks are way too expensive. Way too expensive. And I love my New York strip steaks. So, live cattle futures, we got a reprieve last week, a pullback on live cattle futures, but we want to see a break here. Right now, this just looks like an orderly pullback and getting ready for a continuation breakout. So, fingers crossed we break, but it's not looking all that great. But I'm gonna hope here for cheaper New York strip steaks. What else do we have? I think that's about it. Yeah, I think we're good. We covered it all. All right, so let's go on to a new challenge that we have here. So we have the 30-minute chart club, link below if you want to join in. What that started off as was me going over 30-minute charts of top tier trading stocks and looking for setups. And the engagement is good. What I ran into is that my style of trading is to use more options than trading equities. And although people are very interested in trading options, they don't have the large accounts out there to be able to trade options as I do, meaning undefined risk trades, straddles, strangles, naked positions. So I said to myself, how do I address the needs of my viewers? So I said, let me do this. Let me take 20,000 and I'm going to throw it into a brand new account. And I did that here. This is a active timeline, interactive timeline. So I threw 20 grand in on August the 11th, and it sat there for a few days. I was waiting for Schwab to approve my options and margin. I have two other accounts with them. It should have been done like that. But they started that on the 9th, and they've done nothing yet. I got to follow up tomorrow. I think they forgot about me. So so the cash was sitting there, and I was gonna, after they activated the margin account and options account, I was gonna start talking about this. But then a trade came by, Hawaiian Energy. And so it was an extreme oversold stock. I built the contrarian trader off of trading extreme oversold stocks. And there's going to be a video coming out about this tomorrow. If you're not subscribed to the channel, subscribe to the channel. It's going to be coming out. There's going to be a brand new playlist. And I'm going to be going through how I build a small account into a large account. And once we get to 25,000, we don't have to worry about pattern day trading rules, and we can do naked spreads and naked strategies rather than just using butterflies and covered this, covered calls, and covered puts. So that's fine that we use them, but it's not my cup of tea, right? So being under 25,000 has its limitations. So it's going to be a challenge for me, honestly, to build the account up using undefined risk strategies. So it'll be fun. So this is coming out. I have the first episode coming out. It's recorded. It's edited. I just need to send it out tomorrow, and you're going to be able to watch it. So if you want to join in, and we join in on the 30-minute chart club, we're going to have private live streams talking about strategies and whatnot. I'll be talking about the strategies after I execute the trade. If you want the trades real time, you got to be a member of the Contrarian Trader. I'm going to add a Slack forum or Slack channel named Small Account Trades. And there I'll post the trades for the small account. So that way, if you're a small account trader, you want to see what we're doing in that account, well, you just subscribe and you got access right away. So that's what's coming out. So I'm really excited about it. You know, some days are going to be good, some days are going to be bad, but we'll do a couple of videos a month on this, and we'll see how we progress and how long it takes us to get this above 25,000 and beyond. So I'm confident. It's fun. And I'll talk about the trade tomorrow, Hawaiian Electric, how we profited. Right now, we're up in the past few days since I opened it 2.47% on the trade, but it wasn't without its risks, to be honest with you. So more to come on this tomorrow. Subscribe to the channel. Let's get to it. Let's talk about the new trading week. I'm watching the headline news here. Earthquake, moderate earthquake, rattles. Okay, it's not a big deal. All right, so I was in an earthquake in San Diego, 5.0 on the Richter scale back in I don't even want to say the year, but it was quite jarring, pardon the pun. It was something else. Loud. Okay, so this week's economic data, early on, not much going on here. On Wednesday, it starts getting serious. Why? S&P services PMI and manufacturing PMI. Any read below 50 is a sign of contraction. Any read above 50 is a sign of expansion in the economy. The big news event this coming week is going to be Jackson Hole. Last year, Jackson Hole became a S show for the stock market. So let's see if the same holds true this year. I believe, if memory serves me, he was meaning Powell was very, very hawkish at Jackson Hole last year. Equities did not like it. So let's hear what he has to say this time around and whether or not the equity markets hold up. We're also going to get durable goods. If you're not familiar with what durable goods are, those are washing machines, dryers, etc. Products that last, high ticket items that last for 5, 10 years. At least they used to, not anymore. And we get Jackson Hole into Friday. I don't know when he talks, maybe both days for all I know. But a lot of news always coming out of Jackson Hole. Let's get to the Federal Reserve expectations for a rate hike. They're pricing in no rate hike in September. This changes very little over the past week or so. So the markets are saying that there will be no rate hike. Therefore, there will be no rate hike. Powell never disappoints the market in what they expect, and they're expecting no move. When you go out and into November, I guess there's no October meeting. The markets are expecting at current, this is very much subject to change. They're expecting a move by at least a quarter basis point hike. That's subject to change depending upon economic conditions. And we're going to talk about a problem that we have coming out of China. I touched upon it briefly on Thursday. It only got worse since then. Talking about equity valuations going into the new trading week, they're not good. They're not as... You would think that with a market that got a beating last week that it did, you'd be down with a 20 handle on the Schiller PE ratio. Just goes to show you how earnings are not good. We are still above 30 on the Schiller PE ratio. Equities are still priced for perfection, even after last week's down week. Now, earnings coming out this week, not much, but the ones that are coming out are market movers, have no doubt about that. Zoom after the close, not a big market mover, but an interesting trade nonetheless. I'm not going to be doing earnings trades. I'll tell you right now, I backed off of earnings trades. And I looked at my P&L. I can go back 2 years on Schwab and I take a look at my P&L. And my P&L goes like this on the chart. And so I went back, and it was no shock to me, to be honest with you. Because my biggest drawdowns are always on earnings. So earnings, they seem as if you can't miss trades. And you can get 10 winners. It only takes that one loser to wipe out all of those gains. And I said, you know what? I'm going to take a break from earnings trades for this quarter. And sure enough, my P&L is just gone up like this mirror. It's just like a flat as a mirror going up. No bumps and grinds. None of this peaks and valleys stuff. Just grinding up higher. Why? We're just selling premium. We're putting on high probability trades to the short side, to the long side, whatever. It doesn't matter as long as we have an edge over other traders. So that's working out well. I do not plan on changing that anytime soon. So what else? We have Baidu coming out pre-market Tuesday. The home builder is going to be interesting. I normally don't follow them. I will be following Toll Brothers. They have been in fuego of late. Peloton coming out before the market opens. I'm surprised they're even still in business, to be honest with you. Advanced Auto Parts. I used to trade that on earnings. Not anymore. I'll do post-earnings trades. Now we have after the close on Wednesday, big players are coming out. NVIDIA is the pimp Mac daddy of them all. Obviously, Snowflake to a lesser extent. Thursday, pre-market, Dollar Tree. That IV ranking on Dollar Tree, the options are very expensive, and they have been for quite some time. I don't even think it's earnings related. After the close on Thursday, we get Marvell Technology. It's an AI play. Affirm, Ulta. These are good options trades, but I'm not going to be part of it until after earnings. Now, the pimp Mac daddy of this coming week obviously is NVIDIA. Now, NVIDIA on the month is down 7.34%, but not that far off of its highs. On the week last week, NVIDIA was down. Exactly, I'm sorry, it was up nearly 6% on the week, closing up nearly $25. It did close off the highs of the week, but there was a bullish sentiment out there. People wanted to buy NVIDIA in advance of earnings. I think it's a bad move, to be honest with you, a very bad move, because NVIDIA is extremely expensive, and they have to beat. So when you ask, just how expensive is it? It's this expensive. So when you take a look at the PE ratio, it's at 142%. 142. So very expensive, yes. EPS estimate change current year up 116%. 3-year EPS growth up 28%. But last quarter's EPS were down 20%. Yet it rallied. In fact, I played earnings last quarter and it ripped my face off. So that's why I'm not doing earnings trades. So when you take a look at even a deeper dive on their valuations, you take a look at the price to sales, current versus Q2, Q1, Q4 2022, Q3 2022. Take a look at this. Price to sales, 41.75. That's up from last quarter when their EPS took a nosedive by 20%. It's up dramatically. And relative to where we were in Q1, we were at 17.26. So we are nosebleed territory here on NVIDIA. So they need to beat. They need to beat really handily. So be careful of buying into the narrative. You're going to see these guys come up on CNBC. They're going to have slick back hair. They're going to have $5,000 suits. They're going to be telling you, man, you don't own NVIDIA. You're not a trader. You got to be in this. This is the number one pimp Mac daddy of them all in the equity markets. It's the place to be. If you listen to that blithering, idiotic chatter, taking on that type of a risk into this market environment, you're out of your mind. Be careful. Wait until after earnings. Let the dust settle. Then make a decision. Because what happened to the yield curve on the month so far? The yield curve is steepening, and steepening by a quarter basis point, a very big move. We have not broken out yet on a monthly chart, but as sure as God made green little apples, we are breaking out on a quarterly chart handsomely. Yes, we still have another month and change to go, but this is looking pretty powerful. And equities do not do well in a steepening yield curve environment. And on the week last week, we closed up on the week. The trend is clear. It's defined. We are steepening on the yield curve. And that's when things get real fast in the equity market. So please, if you're thinking about buying a stock, that is, I don't care what it could have the best widget in the world. You're buying a stock that has price to sales of 41.75. That's bananas. That's craziness. What else is looming out there as we proceed into the new trading week is China. And what they're doing now is that they are circling the wagons over in China because Evergrande, which is one of the largest Chinese builders, is filing for bankruptcy protection in Manhattan. And you got to say, wonder why? Why aren't they filing bankruptcy over in China? The reason is that they're an international player with international investors. Evergrande on Friday said it will ask the U.S. court for recognition of schemes of arrangement under offshore debt restructuring for Hong Kong and the British Virgin Islands. It added, the application is a normal procedure for offshore debt restructuring and does not involve the bankruptcy petition. Chapter 15 bankruptcy. I just learned about this weekend. Protection allows U.S. bankruptcy courts to intervene in cross-border insolvency cases involving foreign companies that are long story short, what they're doing here is they're getting in front of the lawsuits. They're going to the bankruptcy courts and saying, listen, hand us down a settlement agreement so that we can't get sued to death because we don't plan on paying anybody back. That's just basically the way it's coming down to. They are insolvent. They're going out. They failed to meet debt payments back in 2021. And I'll be honest with you, in the back of my mind, I was talking to my father. We were talking about this we were out in the Hamptons yesterday. And I was talking about China. He mentioned Evergrande. I'm thinking Evergrande, they went belly up in 2021. They missed debt payments. They didn't go belly up, though. So what else is out there is Tianjin Holdings. That's another one. It's an affiliate of Evergrande. And this one here we spoke about it on Thursday. And this one is not getting any attention. I think we're about it here. It's pretty sad that Country Garden, it is the largest property developer in China. They are about to miss on debt payments. Most recently, Country Garden, which used to be one of China's largest developers, struggled to make coupon payments on U.S. dollar-denominated bonds and issued a profit warning. The firm also suspended trading in at least 10 of its mainland China traded yuan bonds. They're going belly up. So where there's one cockroach, there are many. And as Warren Buffett once said, once the tide goes out, you see who's been around there in the ocean swimming naked. And you're seeing it in China. And the fact that they're coming over to the bankruptcy courts here in the United States tells us that there are international investors that are about to get torched in a very, very big way. And who has counterparty risk to those investors because those counterparties are about to get torched as well. Not to mention, we have our own problems in the debt markets with the regional banks. We have the commercial real estate crisis going on here, and they are just Starwood REIT just handed the keys for one of the, I think it was in Atlanta, for a couple of properties there. Just handed them over to the banks. Your problem now. They walked away with a smile, and this problem is only going to get worse, folks. So please, don't go buying stocks with 40 multiples on their price to sales. Please, I beg of you, not on speculation. If you see a good setup post earnings, fine, go for it. Just don't stay around long. So what I'm looking at going into the new trading week is HYG. This is high yield debt. Because I read these articles, so let me take a look at HYG. You can also take a look at JNK. That's another junk bond ETF, also known as high yield corporate bonds. And they are rolling over. This is a weekly chart. And it appears as though the rally off the lows of October of last year is about done. And it appears as though we are getting ready to break down after putting in lower highs. We never took out the prior high. We are rolling over here. Momentum has a double top and is getting ready to break to a new lower low. Beware here, folks. Volume rose was still below average last week. The high yield debt market is a canary in the coal mine for problems here in the United States in the high yield debt market, especially if yields continue up higher, as it quite very well may very well do. And also as the yield curve, which we talk about constantly, continues to steepen. So these are the problems that are out there. We don't want to get lost in the delusion of this was just a simple correction. We're going to bounce back. We're going to go to new all-time highs. Folks, I have no idea whether or not we're going to do that. All I can tell you is that history has shown me you get a steepening yield curve, equities are going south, and they're going south in a very hard way. So maybe the yield curve stops steepening. Maybe it rolls back over and breaks to new lower lows. I don't know. I don't have a crystal ball. That's why I would rather, in this environment in particular, sell premium, be an options trader. If you're buying a stock, you're taking a lot of risk. It's a flip coin, a flip toss of a coin, whether or not you're going to make money. So unless you have an edge, and usually if I trade equities, we look for the breakout and we enjoy that edge. That's when we have extreme overbought or extreme oversold stocks, or we see momentum after a sell-off begin to pick back up and we join in on that momentum rally. Other than that, I'll tell you, selling premium is a lot more profitable than simply trading equities. Moving on to what I think is going on here this new trading week and why I tried to put a trade on Friday, which didn't happen. They didn't take my offer. That was a reasonable offer. So last week, the dollar on a weekly time frame got stuck right at a resistance level. And I said, you know what? It was down on Friday. Maybe they're going to stall here because it's the price action on the daily chart looked a little bit toppy. This is a daily chart, US dollar, and we're extended relative to historical resistance on momentum. So they gapped it up higher on Friday, yet it reversed off the highs of the day, and we hit the upper band of resistance. Now, maybe we'll break out tomorrow, for all I know. But I'm looking at volume here on the US dollar, and Friday's volume was not indicative of a strong day for the dollar, despite the fact that it closed up fractionally. And when you take a look at the daily closing chart, the dollar looks okay here. We may get a bid by the open tomorrow morning. So I'm not completely 100% guaranteed USDA assured that we're going to break down here on the US dollar, but we're close enough to resistance here where I want to begin speculating on the gold mining stocks. Now, NUGT, we took a large position off the table a couple of months ago, and it was the right thing to do. We got out right before poop hit the fan. But now we are trading down to the support level. A lot of damage has been done here. Over the past year, we are down what? We could go to the quarterly. On the quarter so far, we're down 18.5%. On the year, we are down 17.32%. So what I want to do here is open up a strangle. I did a video on Friday afternoon. It's still up there. Same strategy. If you want to go back, check it out. But we're going to sell the open, say a 15 delta put, sell the open a 15 delta call, creating a strangle going out about 41 days. Actually, no, 35 days, around there. I want to go out further, but they don't have enough strikes on the put side for me to go out far enough away from the share price to feel comfortable. So they're forcing me to go shorter duration. So not loving that, but we'll stay small in the trade. And that's our only defense when we're trading equities or trading options is position sizing. Keep your position sizing small and you'll be fine. I think that's it. What time do we have? 6:45. Perfect. All right. We have 33 people on. Can we get 33 likes, please? I would really appreciate it. All right. What do we got? Pat, PLTR. Let's check it out. I know that was getting beat up. Mike C. Hey, Bob. Hello, man. Hey, Mike. Welcome. Uh, NQ. All right, those are the NASDAQ 100 futures, up 32. Good stuff. Now 38. Okay. Let's take a look. So yeah, we're looking good here. It's pretty much what we expected going into the new trading week. We're probably going to get a rally here. The QQQs held support last week. They rallied off the lows of the week, but they couldn't go positive. So I'm still not bullish on this market. However, we did put on some long risk on Friday. So no great shock if we get to move up higher. But again, we will be looking to short into strength, assuming that the yield curve continues to steepen. All right, let's do some chart requests, and we will call it a night. Walmart. We'll check that out. Okay, let's get to it. TMF. This is that leveraged ETF. We are right at the lower band of a volume shelf, which technically acts as a support level. But TrendSpider, their algorithm is picking off a support level down here at $4.05, which would really be an ideal place to buy. I would love to see a washout on the TMF. Now, is this optionable? And if so, what kind of IV ranking do they have? It is optionable. Ooh, 41 percentile. Interesting. So these are interesting. So what I would do here, I wouldn't be a buyer. I would look to sell premium at the 4 strike, if not 350s. They're illiquid. These options are not very liquid, unfortunately. Yeah, the markets are not good here. So options are probably not going to be an option, pardon the pun. Um, Ultimately, I would like to see a retest of $4.24. That would make it interesting. Weekly view, it bounced off of that volume shelf as expected. Daily view, it's still in a downtrend. Actually, I stand corrected. We broke out on Friday. We broke out. So if you want to nibble here, fine. I would just use a stop loss right below. Not nibble. You can put on a trade here. Use a stop loss right below the lows of last week, because know that if you break down below the lows of last week and close there, you're going down to that $4 handle. So please be very, very careful. This could drop significantly more if we get a breakout on yields or a continuation move higher on yields. Yields have already broken out. So just be careful here. I would use a tight stop. However, it looks interesting. And frankly, this might be one where the put side of the markets don't look good, but the call side looks a little bit more liquid. They're trading calls here. So you may want to sell covered calls on TMF. Next chart up. AMD. Okay, AMD firming up here a bit. It broke support, but bounced off of another one at 101.94. Volume on the month so far is not horrible. Weekly view. There's nothing happening here. Uh, no reason to go buying unless the daily chart persuades me. Momentum on a weekly time frame is moving lower. So you don't have momentum on your side. It is in a downtrend. It's holding support at current daily view. Nice reversal bar on Friday. So you may get a short-term rally here on AMD. So this could be one where you may want to look to, I wouldn't buy the shares. I see no reason to. I would look to sell premium if we get paid a proper premium for them. And you're not going to get it. IV rank of 17%, 7%. There are better trades out there to be had than AMD, at least in terms of options trading. If you want to buy the options, they're cheap, but I wouldn't buy puts. I wouldn't buy calls here. There's no edge whatsoever. Need an edge if you're going to buy premium or buy options. Moving on to PLTR. That's my typo. Okay, so monthly chart. Outside reversal bar on the month. We are at support. Pat's right there, 13.88. It hit that support level and bounced. But usually you get candlesticks like this. I mean, usually you go lower. Not always. Not always. Last week, another one where you don't want to short it, you don't want to buy it. Daily view. It bounced off of support. We may get a rally here. I would price target it at 15.31 per share, and I would be out. Is there an options trade to be at here? I know Pat trades options. Yeah, I mean, you have a 31 percentile ranking, IV percentile ranking. That's pretty good. Not great, but it's attractive. You want to sell a 15 delta, 10 delta to be really, really conservative. I'm into that. I would go out. I wouldn't do the weeklies in August. I would go out further. I would go at least, or max, I would go right now, the September 29s. I'd be eyeballing a delta of around 10, 11. Not much premium there. Not much premium at all. 15 delta. Again, it's not attractive to me. I like, unless you're going to sell a lot of contracts, but I don't know how liquid these options are. I like stocks that are above $100. So not that attractive to me, but if you want the shares, you want to sell some premium away from them to come to you, collect some cash flow, this is certainly a route to take. I mean, if you want to discount if you want the shares, you want to discount on them, sell a 30 delta and get a 50 cent discount on your share price by waiting. So that's one way to play it. but nothing exciting here on PLTR. I think if anything, it's going to pop higher, but very, very short term. Walmart doesn't have a continuation rally post earnings, monthly chart. So right off the bat here, can Walmart move up higher? The answer is yes, but we are hitting the upper band of the Keltner channels at around 167.97. Last week was an outside reversal week or bearish engulfing. Not good. Not good at all. And it was on volume. They were selling Walmart last week very aggressively. Now, on the daily chart, you had earnings. It popped up higher. I'm not a buyer here. I think you fade earnings on this one. And you have a lot of resistance immediately above, whether you're using Keltner channels, volume shelves, whatever. I'm not a buyer here. And in fact, on Friday, they rallied it up and into resistance. What happened? Look at they sold into strength on Friday alone. So, maybe they'll limp it up here, but I think that ultimately they're going to fade it. They're going to move it lower. So Walmart, I'm not a buyer. I wouldn't short it quite yet, but it could quite very well be a short fairly soon. Do we have anything else? We could circle back and take a look at, make sure I didn't miss anybody. Take a look at this futures action and how we're performing. The rut, pretty much unchanged from before. It looks like the action is all in the NASDAQ on the NQ, but that's even pulling back a little bit now. So the question is, do we break out? I think this gets resolved to the upside. And I'm not bullish. I'm not bullish at all in this market. I think that this is any rally here is an opportunity. Silver pulling back a bit. Let's check back in with Nat Gas, which is up nearly 1.25% earlier. It's capitalized on that move. It's moving up higher yet again, possibly flirting with a breakout on a 4-hour time frame. Let's check in with gold. Actually, I want to check with the dollar. Actually, yen yields. I accidentally clicked on this, but rightly so. Yields are now moving up higher, which is why you're seeing the net NQ come off of session highs. This is a problem. So the question is this setting up to be a bear flag setup? Or is this simply just a consolidation and we're getting ready for another challenge at another multi-year high? Bitcoin up over a 0.5 percentage point, but man, nowhere near. This thing got walloped over the weekend. Gold. Gold's pulled back a little bit. I hope we get a washout here on gold. Let's check in with the dollar. Five-minute view. The dollar's rallying back now. So tomorrow morning is going to be an interesting morning. Folks, thank you for being here. Like, subscribe. Don't forget about the 30-minute chart club and that video coming out tomorrow. I'm really excited about it because it's going to hone my skills on using different strategies that I don't normally use. So I sometimes use iron condors, especially during earnings, but butterflies and stuff like that, I'm really not into because they're too expensive, to be honest with you. So we'll get to the count up to 25,000, and then we'll go with undefined risk. So it's going to be an interesting challenge getting it up there, but we've already started up that hill and look forward to helping people learn how to trade a small account, not get caught up with the pattern day trading rules and you get labeled as a pattern day trader. That stinks, and they hit you with all sorts of sanctions and whatnot. So We'll work through it. There's a link below. Subscribe, like the channel, follow us, and I will talk to you soon. Be well. Have a profitable